Hello friends, this is Raj Sastry from Raj Option Trading. Today let's talk about SPACs. So today is December 15, 2021. As you all know, SPACs are Special Purpose Acquisition Corps, and we have all these companies which went IPO using SPACs as a vehicle. So with that, let's look at good, bad, and the ugly and take it from there. Let's look at quick market update. Look at the small cap stocks. There are a lot of SPACs here. We got to look at best ones here. So what we'll do is we'll filter down these small cap SPACs and look at the top small cap stocks with positive gross margin and low debt. And we'll do the same thing with the mid cap. Let's look at the mid cap stocks here and then filter it down using positive gross margin and low debt. Finally, let's look at top SPAC stocks in the large cap area, review few charts, and also rank some of these companies like PaySafe, ASTR, Skills, and so on and so forth, and see who is on the top and who is on the bottom. With that, let's jump in and get started. So as you look through here, we'll cover many companies here. We'll look at PaySafe, Astra, Skills. We got Palantir Technologies, DermTech. We got uh, this is Skills again, and we got Virgin Galactic. So with that, let's jump in and get started. First, we'll do a quick market update from Thinkorswim. Check up on this, futures market and go from there. So as you look through here, we had not so great day yesterday. As you can see here, two continuous down days in S&P 500 futures, and today it's opening up to be a little bit down day here, minus 0.25. This can change. And then we got here Nasdaq. Nasdaq is also opening up a little lower here. We are in a wait and watch mode for Fed to announce the rate hike. And then we got Dow Jones, same story here, down 23 here, and Russell 2000 is also down nicely. There are great opportunities to buy in the stock market. I urge you to keep some money handy and don't get too much into a margin here, because you might get margin calls if you go too deep. Because if the stocks go down, you'll get margin calls because your loss gets accelerated. So with that, let's jump in and look at top SPAC stocks here. So as you look through here from a stock news perspective, Motley Fool is saying DermTech has still a 10 bagger potential. I think DermTech is a great buy here. I'll be slowly accumulating some DermTech stock here. And then you got Microvast here, a EV battery company. They purchased a new R&D center, and I think it's a good one to take a look at. And you got Palantir Technologies. It's after 7-month low here. I think it's in a very good position here. We should slowly accumulate Palantir. This can surprise us on the higher side. And then you got DraftKings here. This is also a 52-week low here. Could be intriguing to buy some DraftKings slowly here and go from there. And we got ADMA Biologics here. They update on the intellectual property. This could be a down stock which is pulled back pretty low here. We'll take a look at this one also. And then we got Simply Good Foods here. Insider sells 5.5 million shares. Still, it's a good SPAC. I like Simply Good Foods. And then got Skills here. This used to be a top stock while ago. Now looks like investors are losing a lot of money, and still they're buying Skills. It's a good mobile video game player here. And then you got Virgin Galactic, Richard Branson's company. Stocks keeps dropping. I think I'm slowly accumulating this company. This many times it provides a good surprise. And then you got ALIT, ALIT. Looks like they are not doing great here. Hedge funds are getting burned. We can take a look at this one also. And finally, we got ASTR, one of my favorite here. These guys are into space, and looks like they're launching a NASA here from Cape Canaveral. This is also a good one here. And then we got here recommendation from Motley Fool here to buy ChargePoint and Disney on the dips. I tend to agree with that. So with that, let's jump in and get started. So let's we already did the market update. Let's jump in here. Look at small cap SPAC stocks here. So as you look through here, this is an ocean. I will not cover this in detail, it's a big lot of small cap SPAC stocks here that went IPO last year and this year. Look, you got to focus on some big candidates here. Keep watching the trading volume. The moment you see high volume indicated by a green text or a green background, focus on those primarily, because that's where the trading volume is going, like HLBZ, even DM desktop metal is also good. And we got the ride, which is a large down, and so on and so forth. Those are the high volume candidates, including TLMD here. And then keep watching what insiders and institutions are doing. For example, Sunlight, there's a nice insider buy and institution buy, a very low cap stock here. And also look, there is a high IV, there is a short ratio, not too high here, but keep watching the short ratio. Also, the moment stock is low, indicated by RSI, many of these stocks are low, maybe with the exception of ACHR here, which is high RSI. All these stocks are low. And look, there is a high short ratio in many candidates. I would also urge you to, don't go into stocks with a high debt ratio here. Many times all these SPACs, they go IPO, and the parent companies, they put lot of debt burden on these companies to make some money off of the interest. So that's why you got to pay close attention to these SPACs with a high debt load here. I would shy away from those and stick with the low debt candidates, which are debt ratio maybe less than 0.8 or something along those lines. Those could be better candidates. And also, keep watching the stocks with nice gross margin here, positive gross margin. For example, TLMD, that looks intriguing, even though it's a very small cap stock here. Look, there is a nice sales growth, gross margin, net margin is negative. That's okay for now. And we got Purple Innovation. Look, it's making money. It's a positive net margin. That's a good one to look at. So this is how you got to look at the stocks and filter them out and go after the stronger candidates with better gross margin. As you can see here, Sunlight is also okay, good gross margin. We got Desktop Metal, 6% gross margin. Avoid the ones with negative gross margin and go after the ones with a positive gross margin. Then go after the sales growth. Look, we got few companies with nice sales growth here. You could go after those. And then also look at low RSI and low debt. So I would use that methodology and go from there. So with that, we got two more pages here. We'll not go through them in detail. Look at the stocks that stand out. We got here Tech stands out with nice sales growth and gross margin. Net margin is negative, which is understandable. And then we got Curiosity Stream here, just $6 company. Look, nice sales growth and gross margin. And same story with RPay here. It's also a good one here. Nice sales growth, gross margin. And I think keep watching the short ratio. Many of these candidates have high short ratio, and keep watching the candidates with high debt load, like Rover here. You might want to avoid because of high debt load here. And look, we got here ZAV. Look at the debt load. That's too much debt load. I think we should look at that carefully here. Typically, I don't like the stocks with so much debt load here. And we got OPAD, same story, high debt load. You should try to go after the better candidates here with nice sales growth and gross margin. And also look here, few companies are in green background here, like Tech, Curiosity, RPay. Those are the ones with the nice sales growth and gross margin. So with that, let's jump in and look at one last page here in the small cap names here. Look, we got few more as you can scan through here. The better candidate could be the one like ARKO. Look, nice gross margin, but look, it's got a high debt ratio. I would not go after that one here. Instead, look at other candidates here like BKSY. Nice sales growth here, and there is no gross margin. So that's why you got to be a little careful with these companies. Go after the ones with nice gross margin like DCGO. Look, there's a nice gross margin, low debt, that works here. And we got a few more here. Core has got a high debt ratio. I would probably avoid that one. And also keep watching the valuations like PS ratio. The moment PS ratio is too high, like 100 plus or say 40, avoid them and look at the lower PS ratio, price to sales ratio candidates. That tells you valuation is low. I would typically stick with PS ratio below 25, so that way you're a little more comfortable. So with that, now let's look at a short list here. Let's look at the small cap SPACs here with positive gross margin and low debt. So out of this 100 plus SPACs here, we are filtering them down to just handful here. Look, we got a short list here, and these stocks have got positive gross margin. As you can see here, they have low debt indicated by debt to equity ratio. You don't see any red here, and low RSI. Many of these are low RSI, probably with the exception of this one here, which is BHIL. I would stick to these candidates, so that way you don't get lost in the huge list of SPACs. Instead, focus on the stronger candidates. And if you're a conservative investor, go after the companies with nice sales growth and gross margin like TLMD. And also, as you look through TLMD, PS ratio is 1. That tells you valuation is also pretty good here, low valuation, which is a good story. And we got a couple more here. Tech is one of my favorite. Tech has got a little bit higher valuation. If you're concerned about valuation, you could buy slowly, and maybe it's okay to avoid also if you're conservative looking at the value type play here. But I tend to buy Tech slowly into this weakness and take it from there. All these names work here. Look, nice sales growth, gross margin. Tech, we got Tattooed Chef, which is also one of my favorite to buy slowly. And then we got Curiosity, that works too. Look, Curiosity has got a high short ratio, as you can see here. And we got RPay, that also works here. Nice sales growth here, and also nice gross margin. So with that, let's jump in and look at mid-cap names. So as you look through mid-cap, again, we got a lot of mid-cap stocks. As you can see here, these are all SPACs. Many of these are doing well. So I would use same methodology. Look at the stocks with nice institution buy or insider buy. That could be one catalyst. Then jump into gross margin. Look at the positive gross margin candidates. We got few ones with nice sales growth and gross margin, like L Pro here. A little bit high debt to equity, but on the lending business, it could be okay to have a little bit higher debt to equity ratio here. And look here, we got Iridium here. It also has got nice quarter-over-quarter sales growth and gross margin. Little higher debt to equity ratio could be okay. Also watch price to sales ratio. The moment is too high, like LAZR here, Luminar. And we got one more here, Virgin Galactic. Buy slowly, no need to rush into those names. But most of these other names have got low PS ratio. You could take a look at that one too. And keep watching nice sales growth and gross margin. Those are the better candidates to stick with and go from there. So with that, let's jump in and look at one more page here, continuation. And look at the nice sales growth and gross margin. Simply Good Food is one of my favorite here. Nice sales growth and gross margin, low debt. And from a valuation perspective, it's 4, which is very low. I think it's a winner here. I would stick to stock like Simply Good Food here and go from there. And look here, we got LMDX here. This one has got positive gross margin, but on the negative side, high debt to equity, probably good to avoid. So with that, in the mid-cap names here, let's filter them out and look at the stronger candidates with the positive gross margin and low debt. Look, we got the short list here. I love many of these companies. ChargePoint, look, nice gross margin here, and RSI is low. And I think it's a good one to buy into this weakness as USA puts more and more charging stations, and USA becomes green with the EV cars. ChargePoint can be a nice winner. And then you got Skills here, mobile gaming play here. Nice gross margin. Look, 94%. That's something good. And they got very, very, very low debt here, high short ratio. This is also a good one to buy into this weakness here. With this high gross margin, they can slowly turn into positive net margin and go from there. And then you got CCCC here, same story. I think they got nice gross margin, as you can see here. I think they also have some sales, so you could stick with that one too. And we got a few more as you can scan through here. And look at Simply Good Food stands out with the nice sales, nice quarter over quarter change here, revenue growth and gross margin that clearly stands out. You could buy that one and go from there. And beaten down stocks like Nicolas, Virgin Galactic also work. So with that, now let's look at the large cap stock names here. Many of these, couple of these names are large cap ones, more than $10 billion market cap. So from a large cap perspective, look, we got Palantir, one of my favorite. Look, nice sales growth, nice gross margin, low debt. I think it's a great one to buy at these levels here. Stock is beaten down 59% from 52-week high. And we got Grab Holdings here. This is also a good one here. Look, there is a nice institution buy. And because it's a newer company, you don't see all the numbers here. Look, nice trading volume here. I would be slowly buying some Grab here. It's a controversial play because there is no growth here. There are no fundamentals. Institutions are buying, so you can put some money to work here with the nice up volume here. And we got a few more like DraftKings, QuantumScape, DNA, AUR. Out of this, I guess, as you look through here, all of them have got at least DNA has got a nice gross margin here. You could probably look at that one slowly and buy and go from there. So with that, now what we'll do is we'll try to rank some of these companies and go from there. Before we rank, probably let's look at the charts, stock charts from Thinkorswim, and see what's a good stock and how the chart is looking up. So with that, let's jump in here, look at few charts. So I will look at our SPAC list here. Let's start with the first one here. Got PaySafe, as you all know, it's a good fintech play here. Stock is down as you see here, and on the balance volume is also low and trying to stabilize as you see here. At these levels, with the RSI is 35, stock is completely sold out. I'm slowly accumulating, not buying huge chunk here. Given this stock can do well, I'm not too happy about the financials of this company, but I think it's a good buy at these levels here to slowly accumulate. No need to back up the truck and buy a lot. Buy slowly on down days. And then you got ASTR. It's again a space company. It's again down here. Look, on the balance volume is going higher. That tells you there are more buyers than sellers. I'm more bullish on ASTR here. I'll be a buyer of ASTR. I think it'll give you a nice exposure to space. And then you got SKLZ here. This has been going down as you can see here. But on the balance volume is trying to be stabilizing here. So I'm a buyer of SKLZ slowly and accumulate. And then you got SUNL, Sunlight. This is going down. Probably I would, I'm not too bullish on this one here because stock chart is going down here, and also on the balance volume is going down. If you want to buy, don't buy too much. Buy a little bit, but chart is not looking great for this one here. And let's look at a few more here. All right, so let's look at the second list here. We got MVST. This one I can buy slowly here. Look, stock is trying to rebound here, as you see here. On the balance volume is trying to go higher. This tells you there are more buyers than sellers. You could buy this one here. They are also into charging stations. I think this is a good one. And then you got ZEV. ZEV, as you can look here, stock is down. On the balance volume is healthy. That's a bullish divergence. You could buy some ZEV here slowly and go from there. Take advantage of this high on the balance volume. And then you got your OWL, as you can see here, stock is down here. On the balance volume is ticking up. Chart indicates it may be okay to slowly buy into this one, given on the balance volume went up and the stock is trying to hit a 200-day moving average. It can bounce off of that too. Little early to say, but it may be okay to slowly buy into this, but we'll look at some fundamentals in the next chart. And then we got ALIT here. This one stock is down, on the balance volume is down. If you're a contrarian, you could buy some, but right now from a technical perspective it's a no-go. All right, let's look at a few more here. We got ADMA. ADMA, as you look here, it's a biotech play here. Stock is down, but on the balance volume is steady. This is a good one to slowly buy. Very low price stock, as you can see here. If you're a long-term investor, don't get into this. But if you're a short-term trader, you could just trade this one. Then got KDMA here. Stock is trying to go higher, as you can see. RSI is 72. That tells you wait here. Don't put your money right now. Let it settle down a little bit, and then you can jump in. Then you got Palantir, one of my favorite here. Right now, stock is a buy. Stock is trading sideways, trying to make some headway here. Try to go higher. On the balance volume is pretty steady. I would be a buyer of Palantir slowly and accumulate. This will do really well. And then you got DM, desktop metal. Stock is going down, and on the balance volume is going down. So it's technically it's not a go here, but you could slowly buy some DM. It's a good stock for the long haul. All right, let's look at one last chart here. As you look through here, we got Grab, a little bit newer IPO here. I think it's a good one to buy, even though we don't have too much numbers here. You could slowly buy into this and be a contrarian here and buy a little bit. Don't put too much money here. And DraftKings is completely sold off, as you can see here. At this level, as a contrarian, you could initiate a small position and go from there. And we got here QuantumScape again. This is also a good company, but they don't have too much revenue right now. They got a lot of promise for the future. I would be buying slowly into the weakness and accumulate. And then you got DNA here. DNA is also a good one here. It's as you can see, it came down, bounced. It's trying to decide where to go here. Nice on the balance volume. I'm a buyer of DNA at these levels and take it from there. So with that, now let's try to rank these companies. I love to look at the rankings and see what makes the top and what's at the bottom. With that, let's jump in. So as you look through here, we are going to rank PaySafe, ASTR, Skills, Sunlight, MVST, ZEV, OWL, and so on and so forth. Understand these are in different industries. That's why we have to look at some, we have to compare this to the industry also, and then see what the best one here. So with that, let's jump in here. From a fundamentals and general market data perspective, all these stocks have got more enterprise value compared to current market cap. That tells you, even if you sell these companies at this time, you'll make more money than the current market cap. And then you got nice trading volume in many of these names here. These are liquid stocks, as you can see here. The lowest trading volume is in ZEV here and maybe MVST. Others are all in million shares traded, which are liquid. And then we look at analysts' recommendation. As you see here, PaySafe, after getting beaten down big time, there is a strong buy rating here, and Sunlight strong buy rating here. And we got sell rating for MVST, as you can see here, and a hold rating for PLTR, strong buy for ADMA. And as you scan through here, target price for many of these stocks are higher than the current price. Look, PaySafe, we got current price $3 and target price is 6.44. And as you can see here, many of these stocks have got higher target price here, with the exception of MVST, which has got lower target price. All these stocks are down big time from 52-week high. And now let's jump in and look at a few more areas. Let's look at fundamentals from a revenue perspective. Look, PaySafe it has a revenue here, $1.4 billion, and it's got a year-over-year revenue growth. From a top-line perspective, this company is growing its revenue. That's a good story. And then you got ADMA here. It's got a $69 million revenue, nice revenue growth, and as well as PLTR, Palantir, nice revenue, $1.4 billion, and nice revenue growth also. Looks like ALIT also has a nice revenue here, but right now too early. They don't have any revenue growth yet. So with that, I would say PaySafe checks out here, and also ADMA and Palantir, both of them checks out here. I think PaySafe and PLTR could be better place here. ADMA is a little bit lower cap, could be a good contrarian type play here, given there is a nice sales growth here. And next we'll look at margins, cash, debt, and valuation. As you look through here, PaySafe does a nice, respectable 60% gross margin. That's a good one. Skills is ultimate. Look, nice 94%, along with Sunlight here, SUNL. MVST also makes a gross margin. That's good. ALIT, good one here. Palantir, great here. At the end of the day, many of these companies are not making money. Look here, there is no positive net margin. All are money losing business for most part. That's why it's good to buy a little bit of these companies. Go after stronger candidates. If you want to buy, go after candidates like PaySafe, Skills, and those type of candidates here with a positive gross margin. I also like ASTR here. They got a lot of promise for the space here. I think that's a good one to slowly buy also. As you look through here, we got free cash flow in PaySafe. That's a good one here. And we got OWL and ALIT with the free cash flow. And Palantir also has a free cash flow. Those are the good ones. And as you look through debt perspective, ZEV has too much debt load on the balance sheet. And ALIT, same story. Probably, caution, be careful. Probably if you can avoid, you could avoid ZEV and ALIT because of this heavy debt load here. And from an earnings per share perspective, Skills is earning. Its earning is positive. That's a good one here. And as you can scan through, all other things have got negative earnings. And I think that's not a great sign here. From a valuation perspective, look, PaySafe is still cheaper, 1.84 valuation. And Skills is also manageable, which is okay. But ZEV, OWL, high valuation, I would try to avoid those high valuation. And Palantir, I think for their growth, I think it's okay here. Little high, but I think it's manageable with the 26, PS ratio here, which is okay. So with that, let's jump in and look at few more criterias. As you look through here from a future growth perspective, we need to look at future growth and the future growth estimates. This is when our analysts will look at the various criteria and come up with the future growth. As you look here, we got earnings per share this year. Many of all these stocks have got negative earnings per growth, but ADMA has got a 1% positive EPS for this year. Now, most importantly, let's look at EPS growth for next year. As you look through here, PaySafe has got nice next year EPS growth, as you see here, and many of these stocks have got nice EPS growth next year. And if you look at this, wow, that's a opening bell. And if you look at the sales growth here, we got nice sales growth for many of these stocks, as you can see here. And from a ROE and ROA perspective, I like the double digit. Maybe Skills is the best here with nice ROE and ROA here. Otherwise, everything else is negative here. So with that, probably Skills checks out here. For most part, it's too high for me, but it's okay. It's more than double digits. And then let's look at a few more here. The technical analysis. From a technical analysis perspective, all these stocks are beaten down, as you can see here. And as you see here, we got money flow index also indicating all these stocks are beaten down, probably with the exception of OWL here, which has got a little bit high money flow index. You could wait on that one here, and you could also wait on ALIT, but otherwise everything else have got low money flow index, indicating these are good entry points here. And as you look through here from a put call ratio perspective, Skills folks are still buying some put options, thinking stock might go down here. But sometimes these put option buyers get crushed. And same story with the OWL. There is a lot of put options. Options market is betting the stock will go down, and also ALIT options market is betting this will go down. They're buying a lot of put options, as you can see here. And there's a high short ratio in many of these stocks here, like Skills and ZEV. High short ratio. On any good news, these shorts can go higher. And look, many of these stocks have share companies don't have too many shares floating here, like ASTR, Sunlight. That can be good news here. There is not too much supply. That will make the stocks go higher because of demand. So with that, let's jump in here and look at a few more criterias. Look at past performance. It's a bloodbath, as you can see here. With the exception of PaySafe, after coming down too big, it's trying to go higher. It could be a good one to buy when the stock is slowly going higher. And we got MVST trying to slowly go higher. It's positive in 1 week, even though it's a negative everywhere. And then you got ADMA. In 3 months it's positive, but otherwise it's negative. So that's why you got to look at this performance. If you hold these stocks for a long time, you would be a loser, as you see here. But at these levels here, stocks like PaySafe could be safe here. It's trying to make its way higher. MVST, as you can see here, it's slowly trying to go higher. Too early to call here. And I love Palantir, even though it's down big time. Could be a long-term play here. They got positive gross margin and positive sales. So with that, let's jump in and look at a simple moving average. So all these stocks are below most of their moving averages. MVST is trying to go above 10-day moving average, even though it's down below a 200-day moving average. So that indicates from a technical perspective, MVST has got some upward momentum here. And look, we got owl here just crossed its 200-day moving average. It's turning bullish at these levels here. Otherwise, all these names are negative from a moving average perspective, from a technical analysis perspective. So with that, let's jump in and try to look at a few more criterias, and we'll also do a ranking here. So with that, as you look through here, PaySafe strong buy, which is a good stock here. They also, as you look through here, they don't have any quarter-over-quarter growth yet, but nice gross margin. So I like PaySafe here. And ASTR is a good one. I like this one also. As you can see here, they got it's a buy rating right now. There is no revenue growth, as you can see here, but there is a lot of promise for the future. It's a good space play here. Then you got Skills. Skills is a better operator here. As you can see here, they got buy rating here, and they also have a nice gross margin, 94%. And you got SUNL, again a low price stock here, and this one also is a strong buy and 94% gross margin. That's very good. Net margin is negative. And we got here MVST. This got a sell rating here. Probably it's good to wait a little bit on this one. Look, gross margin is 15%. If you're a contrarian, you could take the analyst recommendation, sell, and you could in turn buy. But watch out, be a little careful here and go from there. It's a $7 stock, which may be okay. We'll look at for some more numbers. And then you got ZEV. ZEV is down, as you can see here, buy rating. And Palantir has got a hold rating, and ADMA strong buy, as you can see here, and it's got gross margin of negative here. That's not a good story here. Look, ALIT has a positive gross margin. So with that, let's jump in and look at financial and profit and growth grades here. As you look through, clearly Palantir stands out here with a nice B rating on the financial health, and Altman Z score very good. They have a lot of money here. No need to worry about company going out of business. And then you got Piotrowski F score also very good here. It's improving its financial position. Growth wise, it gets a B grade. So I like Palantir here. Nice work on the Palantir side. Stock is beaten down. I would be a buyer here. Then as you scan through here, we got a few greens going on here. We got PaySafe has nice Piotrowski F score. Tells you financials and the accounting is improving here. That's a good one also. And then we got ASTR here, it's also a good one. Nice ALT Z score, indicates this is not going to go out of business. Same story with Skills, nice Z score here. That tells you they got financials wherewithal to keep going. And we got Sunlight. It's a little bit low. It's better than the other companies like PaySafe or ZEV. Anytime the Altman Z score is below 1.8, that indicates company is not sound from a financial perspective. So that's why Sunlight is okay, not too bad, but not great also. But MVST is good financially, no big deal. ZEV not great. It's a low from a financial capital perspective. I would like them to improve this grading here. ALIT again a little bit lower, but not as low as OWL here. And ADMA is the worst of all from a financial Z-score perspective. They don't have too much money on the balance sheet, or not a great position to be in. So with that, from a profit perspective, as we look through here, you got number 4 for ALIT. It looks like they have got good profit rank compared to their industry. And then we got here even Palantir is good. From a industry quality perspective, looks like Sunlight gets a nice 4 here. In their industry, it's doing better. And then you got Skills 5, ADMA also 5, and Palantir 6. Now what we'll do is we'll quickly rank these and see who is on the top. Number 1 goes to Palantir. I like this one here. At these levels, I'm a buyer of Palantir. And number 2 goes to Skills. Look, nice 94% gross margin here. And look, they got a lot of cash position, no need to worry. And also industry quality rank is 5, one of the highest in this list here. And number 3 goes to ASTR. Even though they don't have any gross margin here, they got a lot of money here. They can keep going. Financial health is C. I think it's a good one. A lot of promise for the future in the space area. And number 4 goes to MVST. As you look through MVST here, they got a lot of money here. Altman Z-score is sound, and ranks are not great, but it's number 4. And number 5 is Sunlight. As you look through Sunlight here, they got nice 94% gross margin. They have to improve their financial positioning. I like this score to be above 1.8, but they got nice industry quality rank here. And number 6, PaySafe. As you look through here, PaySafe right now it's got a nice 60% gross margin. Not great from a financial perspective. I like this number to be above 1.8. Right now they're not in a great position here, but profit and quality rank are not great compared to industry, but manageable. I like the Piotrowski F score here. The 5 indicates that improving their financial position, even though right now they're not in a great shape from a financial perspective. And next, let's look at Sunlight here. Sunlight, as you look through here, a nice 94% gross margin here, and financials are not great, not super bad. They got nice quality rank in the industry, which is 4. And number 8 is OWL. OWL, as you can look here, their gross margin is 0%. Financials are not great here. Quality rank is 10. That's why it got a 8 here. And number 9 is ZEV. As you look through ZEV here, their financial positioning is bad, and their profit and quality rank is the bottom in the industry. That's why they got a 9 here. And finally, we got ADMA here. ADMA has got a negative Altman Z-score. Tells you financially this company is not sound. They got a nice growth here. They're growing, but taking too much financial burden on themselves. That's why they're number 10 here. With that, that's the list for you. These are the top SPACs. Always be careful with the SPAC names. Stick with the nice candidates and go from there. With that, thank you very much. Happy investing and trading. Please subscribe.